Hi, everybody. It's Amy Frelinger with my certified financial planner, Jeff DeLarme from DeLarme Wealth Management. It is January 15th, 2021, and we wanted to do a bit of a recap of 2020 for you. Hi, Jeff. Thanks for joining me.
Hey, Amy, good to be with you again. Happy New Year.
Thanks. Happy New Year. All right. So we wanted to do a quick overview, the good, the bad of 2021. You want to kick it off, Jeff?
Sure. So for my markets, financial capital markets, 2020 was a bizarre year, right? I mean, it started off pretty strong. Nobody really saw this pandemic coming out of left field, and we quickly had one of the fastest bear markets on record. People were panicking. Market crashed almost 40%, and then just like that, we got one of the strongest recoveries on record. Left a lot of investors sort of beside themselves. And I don't know about you, but March 23rd, which was the market low, I believe, if you had told me that the markets were going to end up as strong as they did come December 31st, I probably wouldn't have believed you. So in hindsight, for those that stayed invested, it was probably a pretty good year, certainly a great learning year. But let's look forward to 2021.
In fact, you told me that November was share?
Yeah, so last fall we had one of the strongest months in the market since 1987, I believe, and this is after the market had already recovered by and large, and people thought, oh nope, it's topped out, it's going to go backwards, and then we have the best month in 30 years. Pretty incredible, but goes to show how hard it is to predict. I don't know about your market, but my market's pretty hard to predict on the short term.
So I wanted to give you a quick overview on the real estate market. There was a lot of good news. Again, we too saw increased values. I think the buyers at the beginning of the year were thinking the market might soften, and it did not. So all of you homeowners out there, you made money, which is astonishing.
You think that's because of lower rates or more work from home, or what do you think caused that?
So there's a few high points. The first is, as you guys know, the interest rates are historically low, 2.5% to 3.5% for 30-year loans, which is crazy. Inventory is quite low, so there was a lot of competition for multiple offers on properties, and sellers are very encouraged that their properties are gaining in value. So that was all good news. And then the whole work from home dynamic was a huge shift. Work from home and school from home has really shifted people's needs for home to be the place where you're safe, the place where you're working from, and the place where you need an extra room for working from home and school. So how about with yours? Oh, and the other thing I would say is that the economics of renting versus owning narrowed. Rents have gone up. Money has gotten more affordable. So being able to afford a home for what you're paying for in rent has gotten closer. And the one other thing that I would say is that there was much more remote access digitally to 3D tours. I added floor plans. I added more photography. I added drone videos. I added all kinds of stuff so people could actually look at things from their homes. So that's all good news.
I remember wondering, how are people going to go take a look at maybe one of the biggest purchases of their lives, if they can't see it in person. But I remember you telling me that's why you have Zoom, and you could have safety protocols that you follow to show people the home if they checked out, and we got through it, and look at what the year gave us.
It really changed. Let's briefly go through any bad news. Is there any bad news?
Yeah, I mean, I think this is a really good time to be cautious looking forward, because the markets have run up quite a bit. And a lot of that's been aided by, as you mentioned, record low interest rates. The Federal Reserve basically came in and said, we're dropping rates to pretty much zero to be as accommodative as possible. And what that has created is, and you probably heard this in the financial press, this acronym called TINA, which is there is no alternative, which means if you're not earning anything at the bank in your money markets or savings accounts, it's sort of encouraging people or giving them an incentive to go out and take on more risk when they otherwise wouldn't, to try and get yield. So whether that's dividend paying stocks or bonds, and that gives me a little bit of a pause. And I think investors need to be careful that they're not taking too much risk just because the alternative is staying in cash, which doesn't really pay anything. So I think that's a warning sign that individuals should look at for their individual situation.
And goes back to our suggestions about have a plan, right? Lay down the landscape and make sure that you have a plan and have a planner.
Yep, I think that's where the value of professional advice comes in. I know for my practice, most of the new families that we started working with were do-it-yourselfers, and I think 2020 really rattled their cage, so to speak, and they said, I think I need some help here, and I certainly think you should hire a planner. Most people should, but even if you do it yourself, at least have a plan. Know what your strategy is going to be for different market environments. But what about you? What's kind of scary, or what are you thinking people should look out for 2021?
Well, I think the thing that people may not realize is that about 25 to 30% of escrows fall apart. Now, not in my case, happily, but in a lot of cases, everybody thinks they can qualify for loans. It turns out not necessarily. Some of the COVID protocols have changed people's revenue streams. It's changed their income from rental properties. And so loans may not be as easy to qualify for as you might think. Escrows falling apart for various and assorted reasons nobody ever talks about. So I think that's a warning. Multiple offers causing pricing to increase was also kind of disappointing news for buyers, good for sellers. And I think the last thing is the failed hope of buyers that the market was going to decline. But all that said, I still had a lot of clients get into their first homes and have help from another generation, their parents or their grandparents, help them with the downs. We can actually talk about that more later. How about with you? Anything else to kind of tie this up for now?
No, I just think people need to really take stock of their situation. I said that before when we spoke last year, and just make sure that they're prepared for whatever the market throws at them next. Because while things are really good right now, there's going to be something else eventually that causes the markets to want to go into to volatility mode. So hopefully 2021 is a lot smoother year than 2020, and we'll see. We'll do this again next year and recap it.
And my hope would be that home has kept everybody safe and healthy, and that's where you can build your family and your life. So hopefully home has been safe for everybody this year. Thanks for your input. Let's jump
Thanks, Amy.
for now. All right. Have a great one.
one.
Happy 2021.
Same to you.
Bye, Jeff.
Bye.